or into the last quarter of 2025. Bob, which asset classes this year in 2025 so far have surprised you the most in terms of how they performed?
Well, I mean, yeah, any sensible person would look at gold and say, "Wow, that has been on a tear." I mean, I have talked on this show about gold and have talked about the important role of gold in a portfolio for a long time. But the strength that we've seen in the yellow metal is quite impressive here. I think really two factors going into it. One, of all the assets in the risky asset spectrum. Gold is pretty underowned. A lot of people own stocks, a lot of people own bonds, other growth assets. They don't really own a lot of gold. And it doesn't take much in terms of flows to go from traditional financial assets to gold in order to create a squeeze in price. And so we're seeing that squeeze there. And then, of course, there's sort of a broader story here around, it's really a broader developed world story, not really just a US story, around basically giving up on inflation mandates in order to support growth. That was sparked in many ways by Chairman Powell's Jackson Hole speech, but also reinforced by the efforts from the Bank of England that's facing even higher inflation in the US and still cutting rates. And in that environment where you have monetary debasement of fiat combined with risk-taking behavior and an underowned environment in gold, it makes sense, why gold has seen such a spike relative to other assets in the market.
So you're saying gold is signaling much higher inflation, or perhaps economic deterioration, or perhaps geopolitical uncertainty, or all of the above, none of the above?
Yeah, I think it's mostly it's signaling two things: a desire for speculative risk taking, meaning that people are just interested in buying financial assets, levering up to buy financial assets, which is why you're seeing it outperform at the same time that stocks are up, which is a pretty unusual circumstance. But part of the story from a fundamentals perspective is that I think there's a broad-based view that central bankers across the developed world are going to give up on their inflation mandates and instead basically depress their currencies in order to support their bond markets and their economies. And there's basically only one true fiat contra currency that's out there, and that's gold.